Hi everyone, welcome to the proptrade.com. It is February, it is Monday, it's the 2nd of February. Welcome, first trading day of the month, and thank heavens January is over. I had my worst trading month in a very, very long time. I think I told you the week before last, I had my worst week in 72 weeks, week before last. And last week was also a losing week, so I've had two consecutive quite big losing weeks, actually. 711 points I was down last week, but percentage wise, it was a little over two and a bit percent, 2.1% last week. No, it wasn't that much. It was 1.875% last week on a percentage terms. The points look big because it was the Nikkei clobbered me a couple of times, the Dow clobbered me a couple of times, the DAX was a loser, the FTSE was a loser, but we had a big winner on the NASDAQ as well to compensate for some of that. But anyway, overall, it's the overall numbers, isn't it? And that's what you got to think about. It's the overall position, your equity curve. Where are you at the end of the day, at the end of the session, at the end of the week, at the end of the month? And for me, January is a big loser, the biggest losing month for a long time. But that, the longer you trade, guys, I'm just trying to look at my notes here I've made here. 1,516 points, 1,516 points and 80.85 points wise last month. We had two consecutive losing weeks. 1,090 points week 3 and 711 points last week. So it's just trading, my friends. It's what happens. And you've got to make sure that when you do have these losing weeks or sessions or months, or in my case, we've had here in 2 consecutive weeks, it's just what happens. Don't get too down about it. Equally, when you're winning, don't get too, this is easy, this trading lark. Anybody can do it. That was a fatal error I made when I very first started trading. It looked easy. It was just a big, strong trending markets like we've got at the moment. But anyway, markets have a remarkable knack of slapping you in the face when you're up and pulling you up when you're down. So it's all about process. I wrote it on our Discord channel earlier today. You can probably find it on the trading chat rather than on the main home chat here. I'm going to repeat this now, but if you want to read it later, this is it. 12:50 in our under the trade chat. I also put it under the general chat, but there's lots more stuff comes in there. Shashwat was talking about having a bad session, a bad morning this morning, I think, on the euro and sterling. And I wrote to him, as traders, we are risk. Can you see that there? Let me just make myself a little bit smaller. I don't know if you can see that. And you can zoom that. I can't zoom that up, can I? Can I zoom this up at all? I don't think I can I? Make that bigger? Can't. Anyway, I'll say here, as traders, we are risk managers first and foremost. We have to manage the risk every single trade, every single session, every single day and week. And that's, my point. And Shashwat called it a gem. It's, it's not, as I've just said here, I had my worst trading month in a long time, 1,200 pips, 2 consecutive losing weeks. Doesn't happen very often to me, but, it happens. And I say the longer you do it, the more likelihood is it to happen. Just saying here, February. What's going to February? I don't know. I took a week's leave last year in February, and we were only trading for 3 weeks, and we were up 978 points as we were measuring the points. And I say the point is, guys, the issue is that we know my system and approach will win in the long run, and my process is everything. It's process that wins in the end, not individual trades or weeks, as I've just experienced months. Stay positive, analyze everything, write stuff down, have a trading log with diary, however you do it, but always manage your risk and accept that we have drawdowns and losing runs, and that's really all you could ask for, my friends. So I say good evening, good morning, good afternoon, wherever you are in the world. It's nearly 3 o'clock here. We've had some actually decent data out of Europe this morning from the data point. I'll come to obviously the massive moves we've seen regarding sentiment and unwinding of positions in a minute. But if we just go to the calendar for Monday, as we kick off the week, obviously it's non-farm payroll on Friday. Everybody will be gearing up for that. We had the OPEC meetings over the weekend. No real change there, but... appointment of Kevin Walsh as Kevin Walsh as head of the Fed, potentially more hawkish, and quite a quicker run down in interest rates. We'll see the dollars recouped, and stock markets have dived a bit and then come back. Gold and silver, obviously, these massive commodity runs have all blown up on Friday significantly. It started on Thursday. They're down again today. Copper looks quite interesting though. Copper seems to have a wider, remember, industrial metal involved in all things AI, data centers, cables, and all the rest of it. Anyway, more on that as it transpires. Well, I was trying to get to the point I was trying to make. PMIs here in Europe. Remember, PMIs are important because they're forward-looking. Manufacturing in big recession areas around the world. You can see here just these Spanish numbers, Italian numbers, all still negative. They dipped a wee bit, but all still negative. The French number held above zero. Germany, its best number for a while. Germany, remember, well, not used to be, still probably is the manufacturing hub of the EU, but still in contraction at 49.1. Better news out of the UK, which there's a lot of chat over there. There's an interesting article I read over the weekend about the green shoots in the UK might finally be coming through, and we might see quite a significant growth in the UK. It might be a bit too late to save Starmer in the local elections coming up in May, but 51.8. We've been positive for a while, or for a couple of months in the UK. So again, seeds looking better. 52.4 from the S&P Manufacturing PMI data. The date that's just about to drop, we can see here, is the more important Institute of Service Managers, the Manufacturing PMI, 48.5, expected to tick up from 47.9. Let's have a look what it looks like as it's just about to drop here for its factory. Obviously, this is a delayed internet lead, so obviously if you've got a Bloomberg terminal or Reuters terminal, you will have known already. So good news for the US, finally into positive territory, 52.6. The president will be shouting about that later on today, no doubt. Raphael Bostock got a speech later on today. It could be key. He's quite reluctant to be putting rates. Oh, by the way, do you like this shirt? This suit is old, but I've got a jacket on and a shirt on. I'm coming to a serviced office today, and so I thought I better make a bit of an effort. I did have my running gear on earlier, but I put my jacket and shirt on. I hope you appreciate it. I don't know if the boss is watching, but if you are, jacket and shirt today because I'm in a different office today. So anyway, services PMIs better than expected, 52.6. That should have lifted the dollar further, and probably maybe lifted stock markets. Stock markets have started positively this morning in the United States, or this afternoon in the United States. Big week ahead, as I say. We've got the RBA overnight tonight into tomorrow. A potential hike from the RBA tomorrow. Look at this, hiking rates, 3.8%. That will be a bit of a shock to the system, but it's been talked about for a while. The persistent pressure on inflation has meant that they, to the downside, has meant that they're looking to push rates up and cool things a tad. So it'll be interesting, the press conference later tomorrow morning. Job openings also later on Tuesday. We'll be live for this tomorrow. New Zealand unemployment change. Then Wednesday, we got inflation and services PMI start to come out from Europe. The ADP number and services PMIs out of the US this time on Wednesday. So services much more important to the US economy. You see it's 52.5 already. But for manufacturing to bounce back like that, that's the sort of thing that Trump's been trumpeting as he does since he came back to office just over a year ago now. And then Thursday brings us the Bank of England, the ECB, and lots of chatter about that as well. Bank of England looks set not to do anything clearly, and also the ECB, that the inflation tick up has kept that in place. So 3.75 and 2.15% respectively for the BOE and the ECB later on in the week. But that's all later on in the week. Today we've had relatively good news from Europe and the manufacturing PMIs, and quite strong again. As, Trump has his fair comments, has his fair critics, but the data is saying that is the stronger number, isn't it? And prices here ticking down 0.5 of 1 point. ISM manufacturing price, so that's also feeding into the Trump narrative on the economy. So 52.6 manufacturing PMIs. Let's have a look what that looks like as far as the market's concerned. Hello. Oops, lost the link. There we are. Sorry, this is the 5-minute chart on the Dow. So the Dow had been up and it's rolled over a tad as the data's come out. Let's have a look at the Forex market. Let's say dollar has been on the front foot this morning. Well, for a while, hasn't it? Euro bounced back. Sorry, it's 5 minutes. Let's go up to the hourly chart so we see what's been going on today. Euro dollar, say, been on the front foot today, and it has been for a while from this top we had towards the end of January the 27th there, where we went to the 120 was breached, wasn't it? Very, very brief, just a 3 or 4 hour session. Lots of targets to the upside for many institutions targeting that 120 level. So some profit being taken off. Obviously, we had the end of the month situation as well. But since Wash got that news broke on Friday, the dollar's continued to improve. And euro here has continued to sink. So 118, as I've got marked here, is the next key support area. That gap we saw over the weekend back at the end of January has been filled, and 118 becomes the definite support area. Remember the third and fourth quarter we were pivoting around 117 for a long time, not showing much direction, but dollars definitely on that front foot and being added impetus from the Wash appointment. So euro 118.20 at the moment. You can see that if we go to the 4 hour time frame, it's a bit cleaner move down into the under half of the Bollinger Band there on the close on Thursday, and then move down again Friday and down again this morning, and nice trending lower 4 hour trend. And again, you see the daily euro big sell off on Friday. And for the end of the month, rocketed to 120, and then we're back to this area. So you can see my blue line here at 118. I hope you can see was this previous resistance zone as we were moving up towards the end of last year as well. So 118 becomes absolutely key now for the euro bulls to hang on to as we go forward. No, there's nobody. Somebody commenting there. So that's euro. Dollar yen 155. Also dollar recovering the last week or so from this plunge to 152 last week. Strong day Friday, up again today. That gap to be filled now. So target 155.70 from the 23rd. Remember, this Sunday we've got that lower House of Parliament election in Japan. So election in full blow now. Ms. Takahashi, the Prime Minister, looking for her own mandate from becoming leader of the Liberals, but looking to move economic policy quite fundamentally in her direction, her belief pattern, and some big fiscal stimulus is perhaps coming for the Japanese economy. We shall see what actually transpires. The loonie dollar CAD 136.50 today. Dollar coming back from that plunge under the 135.50 zone we talked about. For quite a while, the dollar weakening quite significantly. So we went as low as 134.86. So we did breach 135 on Thursday, recovered from it on Friday, and we're up again today. Dollars come back. Let's should make that dotted line now. That 135.50 and put in 135 because again, big right there was that area we were talking about, weren't we, last week as a target zone for the downside that's been achieved. And we got to look a long way to the left, takes us all the way back to September when we were last tested under 135. So let me just put 135 in as a fixed line and make it a full line and double line and make it make it 135. I am looking forward to RMT5 coming. It's imminent, my friends. So just bear with me. I'll be able to do all the dollar screens all at once. I'll just be able to click on the tabs. We'll see them all. But I say Trade Locker, I love the risk management tool on Trade Locker. If you're trading one asset at a time, Trade Locker's good. I'll come to gold in a minute, my friend. Huge moves in the commodity markets, but it was somewhat inevitable. As I've been saying for a while, the parabolic moves always end quite dramatically. Whether the end is over, I don't know. But we're certainly seeing some central bank. That's what you want to monitor. Has been the restructuring of the market. Central banks buying significantly, which has helped this move. But we'll come to gold in a minute, Harry. And see where we think that might go. So Forex, dollar stronger, basically. So dollar CAD's been into 135. Let's run through the others. Sterling, 135.50, come down from that 138 we had last week. So into a support area, into a key support area now here, 136.50, or a previous, I'm saying support area, previous resistance area on the way up. And so that might break quite quickly. 135 is a hugely psychological number. We just talked about 135 for the loonie, 135 sterling also hugely psychological. 136 obviously before then, and there's some sort of pivot areas here at 136. You can see that area here below that there, and that's that there. So 136 running through here. Will we test it today? We are 50 pips above it. Sort of above it at the moment, but key area moving forward. Still in the upper half of the Bollinger Band, but a big round top there. 3 pivot, high. Well, not really. It's sloped off, hasn't it? It didn't actually get high. Got high in the first candle to the upside, so it's messy. Clearly didn't want to be up there. Got a bit too high, overexposed. And you see here, the end of day trader using this strategy would have gone short on Friday night on that big down candle, and it's followed through today. Significant support, as you can see. The 20-day moving average 135.40. Top of that flat Bollinger Band 135.60, and that big initial day there on the 23rd closed out at 136.40. So we've tested 136.40 already today. So could be this big candle here. Could see a big move down that. So watch that this week as well. 138 looks a step too far to the upside of cable. Bearing in mind those datas. Aussie, one of the best performers against the dollar. .70 breached last week briefly. We got as high as just within the zone of .71, and then came down strongly on Friday. RBA overnight tonight, so see what comes of that. And 69.25 being tested this morning, 68 and 68, 69 just through here. That gap looks like that perhaps needs to be filled now. So the move down to 68.95 could be tested with all the datas. Okay. You can call me Matthew. Matthew, hello. Oh, Matthew. That sort of makes sense. I understand that from your acronym. Yeah. Okay. Let's. So that's the forex market. Anything else? Anybody else? Or Matthew wants to look at forex? Let's have a jump to the metals. We can only offer you gold and silver here, but silver. What a parabolic move! But what a retrace. Remember, we got to 100. I'm going to start with silver, Matthew, if you don't mind, because it's had the biggest hiccup, biggest shakeout. This time last week, let's go back to this time last week, beginning of the final week of the month. 26 was pretty volatile, wasn't it? Went through 112, 120. First sign of weakness in a while. That's it's a doji candle, big long wick, rejection of higher prices. However, Tuesday, Wednesday, quite steady, strong candle. Certainly Tuesday was a nice bodied candle, took us higher, took us to a new all-time high. Actually, it wasn't an all-time high. It was all-time closing high on Tuesday. We got a new all-time high this time last week as we went to 117.70. We closed around that level on Wednesday. More volatility on Thursday as we put in the new all-time high over 121. So we'd gone over 120, haven't breached $100 for an ounce for silver on the Friday of the previous week, and then the almighty sell-off we saw on Friday into close. It was triggered. Well, it was added. The momentum was added when Walsh was confirmed as Trump's nominee. If we go back to the hour, I'm sure you all don't need to see this pain, but an almighty sell-off on Thursday initially on the US Open, but this is Friday's breach back under 100 in the European Open. We had a weak Asian session, then we crashed through 100. Looked like we might have been hanging on to it, and then as Europe got going, the US came in on Friday with vicious close here. This is the 5 o'clock, 6 o'clock candles in the at my time. So this is sort of still mid-afternoon on Friday, but into the US close, we went lower, and this morning we've been as low as $71. So a big old move to the downside. Is it over? Well, never. It's not over till it's over, is it? I know it's a bit of a twee thing to say, but it's too early to say. Put your old Fibonacci retrace on there. But as you can see here, $70. It took a while, a few days, even this massive rally for us to break away from that $70 range. So $70, we've been in to test it today. We're at 78 now, and that minor resistance at 84 and 95 has just been clobbered completely on Friday. So massive engulfing candle on Friday, taking out 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 days, 14 days taken out. And if we go back to the beginning of the year, that's what lots of people will be looking at. And the year started here around about that $70 level. So all of the massive gains we've seen in January potentially wiped out for some traders. So many trading on leverage would have been caught out by that. Many CFD traders would have been hurt. Many futures traders would have been hurt, and options closing. So vicious trading, guys. That's why I always talk about risk management. Don't get your stop loss too close, but don't have it too far away either. And it's not a guarantee that it's going to get hit or in volatile markets. But that looks like a really, really volatile day, doesn't it? But as we went down to the hourly chart, it was quite a measured sell-off, really. I mean, it was significant. It started on Thursday on US Open, but it was down on an hourly basis. So there was plenty of times to get out in a bit more organized way. But if you're trading on the short term, you've got to be very, very careful. But inevitable, as I say, we've seen it many, many times in many, many markets. Things that move really parabolic, they end very, very quickly. I keep saying end. Certainly this move up has ended, but many have been saying it's been coming simply because of the steepness of the chart, steepness of the angle as we've gone up. So it's much more. It's been much more exaggerated in silver. So where will we settle? That's the key thing. And remember, this is the first trading day of the new month as well. So there'll be lots of positions getting closed, getting squeezed out, new positions being opened. And let's see where that settles if indeed we have recalibrated. But the demand, the reason we went up is still there. The fundamentals haven't changed. The AI rollout, the data center rollout, silver, copper, platinum, all massively in demand for these this growth of producing energy, the new energy plants around the US. So in particular, but other parts of the world as well, all still in demand. And if we do start to see the US economy start to move forward, and given that we've avoided recession under Biden and Trump and Powell's tenure, will the US economy do better than many are potentially expecting? So we shall see. Or will we see, the cracks in this massive capital expenditure all the big IT companies are committed to, not seeing return. The return on the AI productivity for ordinary businesses, ordinary companies, small companies upwards. Is it coming through? Is it this year that it happens? So markets always, history shows us this, get ahead of themselves. They go too high, they go too low, whichever direction they're going in. Exuberance kicks in, fear of missing out drives it higher. The smart money, gets in early, gets out early as well. So could have got in at 58 and got out at 100 and have been quite happy with smart money because they've had such a massive move, or 56 or whatever it is. Just using this chart as an example. Right, Matthew, sorry. Thank you for your patience. So very, very similar move on gold. We were talking about that, literally on Thursday, this new all-time high, 5,600, unprecedented rally. It looked like 5,000 was holding at one point on Friday, and again, a bit like the silver sell-off. It wasn't. It was dramatic. Obviously, we had a massive down candle, but if we look at it here on the hourly time frame, there's that 3 o'clock Thursday. First big heads up that this was perhaps we had run out of steam, but we rallied back into close. The Asian session was buying, but again, suggestions here. We've been trading this overnight Thursday. The 20-hour held. We're under half. We didn't move up. Here you can see this. We rallied quite nicely, but then we crossed again to the downside and moved down again. We didn't move up. It was a weak move up before we finally found a low, and that took until this morning as the Europeans started trading the yellow stuff, where we found support 4,500, 4,500, 5,000. Wasn't even it was tested for a few hours, but it breached very, very quickly. All breached on Friday. So 5,000, 4,400 is where the bias came in this morning. We did get lower than that. We went under 4,400 as well here. So as the COMEX exchanges, the LME was opening here in London this morning. We've seen buyers today, but as you can see here, it's a weak rally. We've ran to the 20-hour, broke it for the first time since Thursday. Here we are. See, this is back on Thursday, but it was only for an hour, and then sellers came in again. So nervous markets this morning in Europe. So we've been bid from 4,500. We got to 4,000. Close to 4,800. So plenty of, if you'd held that trend this morning, and now we're down again. So let's see how the first day of February closes. And again, here, this is looking like, we've rallied from, here, you'd have got an entry, might have gotten in that candle here in a bit on the hourly chart at 4,582, and then taken it to the midpoint, but at the Bollinger Band. But then, I'd be out now because of that down candle we saw at 1 o'clock. If I was trading this on the hourly time frame, we are in this overbought area. Bagged some profit on. Certainly, if I'd missed a lot of this trend move down, but again, the trend is very much overseeing. So where do we go from here? Presumably, everybody's asking now. Well, let's just go back to the daily time frame, get us a higher perspective of what's going on. So we've had this parabolic move, really, really strong. We've been overbought here on our stochastics from the 13th of January. We're now back into a bit of, we've dipped quite aggressively the 2nd of February, following through. Not, as you can see here, not as aggressive down spike on Friday, looking at the body of the candle. We've engulfed 1, 2, 3, 4, 5, 6 days really into that close on Friday. Interestingly, it's the price that where gold was sitting when Trump started speaking in Davos. Whether it's probably just a coincidence, but who knows? Who knows these days? Anything's possible. But the other key thing here on our derivatives market is the gap on open from Friday's close to Monday's open was to the downside. We are now, for the first time in a long time, I didn't show you that, I didn't point this out on the silver market, but first time in a long time today, in the under half of the Bollinger Band. We've had a big move up. We are now under the 20-day moving average. So again, lots of simple end of day positions, and maybe taking a short position. And I think actually, I've actually got my trading platform over here now. I rearranged the, because I'm in this office now, I've rearranged things here, and I think I've got a trigger. Let me just let you know. I think there's a gold trigger. Yeah, I've got it on my end of day sort of conservative position. It's got an end of day short after Fridays and Thursdays sell off, potentially brewing for tonight. But it's been okay. We had a long on the 6th of January. That's the last trigger on this end of day basis. We had a short which didn't play out on the 30th of December, and then one before that was a long on the what date's that? I can't see that. No, what date's that? You buffoon. 10th of December. So it doesn't trigger very much, but the shorts have been unsuccessful. The short on the 8th, which was a loser. Well, actually, it finished flat. The long, obviously, from the 10th of December was a big winner. The short from the 30th of December was a loser. And obviously, the big winner was the 6th of December, 6th of January. And it's rallied, trailed that all the way up and then got stopped out on Thursday. In fact, that got stopped out. So now this is triggering shorts. So the shorts have not played out. Whether today's will be any better because we've got bigger candles on Friday and today at the moment. So that's at the moment my end of day system is triggering a short on gold. Matthew, if you're interested or not, I don't care. Oh, sorry, it's not. I mean, I don't care. I mean, it's up to you, but that's it's not advice. Far from it. And obviously, be careful when you're trading gold. Understand, pips, points, how you're trading it, what your broker is offering you. If you're trading with us at theproptrade.com, obviously, you understand the leverage on the asset and how it moves. So gold massively down Friday, down again today. Let's have a look at the trading time. Let's step down. So that's the daily. The hourly is weak as well, but as we said, we've bounced, but it looks like resistance. So that's nothing really there on the hour. I've closed that out. The 30 minutes is probably already rolled over. In fact, there we are, burst into the upper half, and there's the 30-minute cross. In fact, that is not a legitimate short because we haven't touched the outside of the Bollinger Band now on the 30 period. So it's no trade on the 30-minute, 15-minute. Flattening out. There's the cross, but again, no, it hasn't touched it. So there's no trade on the 15-minute, 5-minute, on 2-minute. If we want to try and we've zoom this. Sorry, pop. We had a cross there, so we're waiting to go short. That would have gone short. Not there. You would have got filled there. Actually, you wouldn't take because it's too choppy. That's why I don't usually go. So that would have gone short. I wouldn't know. You would have been filled on that one. So that's short. So gold here on the 5-minute would have triggered short at 14.50, and stop loss would have been up here to start off with, and that's still short, but it's not really going anywhere because we were looking to target the bottom of the Bollinger Band there. 4,680 from an entry at 4,721. So it's a bit of a move if it plays out. But we'll see. It looks like we may be running out of steam here. See as the orange and the blue line come together. Matthew, tell me, how are you trading this? Are you a price action trader? You're a trend following trader. This is our stochastics and Bollinger Band setup, which is a mean reverting strategy, which I use more on the intraday. MACD and SAR's a nice one as well. That's a trend following. So there you can see MACD here on the 4-hour, very much short, obviously. Going back to the 5-minute, a bit messy on the 5-minute MACD. So because the nature of the parabolic side chops around a bit more, and the MACD is much more. Sort of had this before with the MACD. Stretch it out. There we are. The MACD is smoother, but it's messy, isn't it? Yeah, it's not. So that would have gone long then. Yeah, that would have gone long here, up, and then it stopped you out there. Parabolic side, it's flipped there. Yet to cross. So this strategy would have gone short there at 10. That's gone short at 15. 15.10. So that this strategy here on 5 minutes. This is a trend following setup though, really, rather than a mean reverting strategy. So that's short there. Stop loss. The turn is up here where the last parabolic is, pulling it down as we go down. So again, it's in the money at the moment, but whether we break below where we are now, which is quite interesting. Look, there's that should be a potential target down there, 4657 on that setup for gold. Harry, Matthew, why do I keep calling you Harry? I'm sorry. I think it's because it looks like it's Harry Hararasov. So Matthew, sorry. It's created an inverted head and shoulders. I'm looking at buys right now. Okay, fair enough. Yep, yeah, and see that, call that. Let's go to see what Harry's talking about here. If you don't know what an inverted head and shoulder, oops, not on the hourly chart. What time frame are you talking about, Harry? 5 minutes or they're 5. You're looking to buy this. I'm guessing you're talking about this 5 minute. I say this trend following strategy is short from here. Let me just put that on there. Here on the system. People write into me and email saying, why are you still using all these old indicators? They're slow, they're delayed. You should be looking at volume and price action and all the rest of it. I am, because they work for me. I mean, they don't work all the time. Obviously, nothing works all the time. But this, as a trend following strategy in a market that's chopping around, is in the money at the moment. So I'd be happy to take some profit off if we get to this level there. That would be where we are now, basically. See the floor? We could continue, and it looks like we should be continuing. So I might take a little bit of profit off there. If I was live trading this now to the downside. So you're looking to go long, Harry. So what you'd be looking for is a pull down here on these shorter time frames, these 2 minute and 5 minute time frames, to test lower, test if we are actually going to go below this level. If you've identified your inverted head and shoulders, let me have a look at what you're on a 15 minute. Let's have a look what you're looking at. Okay, so shoulder through here. There's the low here. Where's that? That was this morning. Yeah, that's the low we identified. So you're looking at this turnaround here. So looking for the break of the neckline to see what's going to go from here to the upside. Okay, so again, when I'm here with you guys, I tend to do some shorter time frame, but so this is short, but obviously very much against it's with the higher time frame, isn't it? If you look at this is the Thai time frame. Today's been down. We've had a retrace on the hourly, and now we've gone back with trend here today. Obviously, you're looking at the 15 minute setup, looking for an inverted head and shoulders through here, and looking to take it long again. So yeah, best of luck. It's what works for you guys. Remember, there isn't a right and wrong way. I'm not going to say this work is better than that. Obviously, that will all come out in the numbers. But this is particularly a mean. It's a trend following strategy. The Bollinger Band and stochastics is a mean reverting strategy. If we look at some of our the very simple one, which I used for years, and I still do years and years. So this remains short, the 4 hour. The 1 hour will still be short. I guess it might come back now. It's closed out. And interestingly, the trend following strategy here, the crossing moving averages, we had a tick higher, but we didn't run out of steam this morning there, 12 o'clock. Now we got big down candle engulfing the previous 2 hours. That would be enough to take me short at 1 o'clock on this strategy. Keep it simple, short again. That's what the 5 minute one is saying, isn't it, on our other one? So the 5 minute here, it's much messier because it chops around much more. But again, long and then short. That would have gone short. Actually, there at 14.50. Stop loss up here. Sideways, that's crossed. Then nothing happening. Nothing. Then we gone longer. So then we move down. So my stop loss now will be round about the entry on this 5 minute. Crossing moving average. There you go. Simplest of them all. Crossing moving average. Are we testing into the low on Matthew's inverted head and shoulders? Let's see. So 1460. Sorry, 4,660. So all of these strategies will be in the money now. or these trend following strategies, the crossing EMA, the MACD and SAR, we just saw earlier. It's from here, that's in the money here on that's 15 minutes. Go back to 5 minutes, so we're looking like for like. So there we are. That's nicely in the money. Trailer stop loss down now. So that's our entry. Our stop loss, here, pulled it from up here, pulled it down, and we're trending it down. And then our mean reverting strategy. So remember, these are trend following. So they're with the higher they're with the higher time frame trend, even though we're only looking at 5 minutes. So if we look at our mean reverting strategy, our Bollinger Band stochastic, what's that telling us? Well, there we go. You see the 5 minute, as we said earlier, we've touched the outside of the Bollinger Band now, or we did 5 minutes ago. So this is looking for a buy also, potentially. But the trend is still down. We're still not in the oversold area here with our stochastics. Remember, the stochastics on this setup are 10, 6, and 3. I'll be interested to see if anybody uses these setups I've shared with you over the years, and how well you do or badly you do with them. But this is looking for a buy, but not yet, because we haven't had a cross. So the trend is still down. I'd still be with my trend following, and we're in the money. This one's out of the money and waiting. Or, indeed, what do we say about trend following? That would have been our entry there. We wouldn't have got in there. We'd have got in there and probably, still in that. So this is still in. It's hit target 1, so we might have been out. So here, rules are we've hit first target because we got in at the Bollinger Band at the midline, and before it actually triggered, we'd have taken half, perhaps more off here, looking for it to come back. But we're waiting for this cross to completely close out. But the momentum's been down, just why and literally here you can see it changing whilst I've been speaking. So it's all about waiting for the candles to complete. That here on the 5 minute is suggesting we don't want to go any lower. Rejection of lower prices. Big wick. Remember, is that now over? Is this leg down? Is this leg done? We've gone lower than we did here at 1420. We've gone lower than we did here at 1340. So that wasn't as low as that, but that was the low of the day or the low of the afternoon, if you like. This is the low of the US session at 14,649. So again, we got on the big round numbers. See how the big round numbers play out? 14,650. So is Matthew's playing out? Let me know how you get on, Matthew. I'm going to wrap this up now because I'm going a bit hoarse for some reason. Once we've finished our run of the market. So crypto, the other big news of the weekend was the continued weakness in Bitcoin, 78,445. We currently trade out. Let me take you back to the daily. Again, huge shakeout. This time on Saturday, on a Bitcoin, we'd had a big sell-off on Thursday, breaking the 85,000 level. Remember, we've been talking about these down level targets for quite a while. Not too interested because we were very much channel bound, but this big candle we saw on Thursday was a bit of a heads up that we were weakening. Again, we'd rejected the break of 92 and 95. We'd had a flat trade there, and we were we'd been under the 20-day moving average since the 20th of January. The big candles were to the downside. They were red, not green, and many buyers would have added. It's pushed it lower. Looked like we were getting buyers at 85,000 on Thursday, and we were still in the channel. That looked okay. Closed up Thursday. Friday wasn't too much of a worry. Saturday was actually reasonable volume as well, and it was to the downside. So we breached 85, and we breached that this intraday low we'd seen on the 21st of November. We talked about a lot to 80,500, and then we continued decline into the key 75,000 level. So we haven't closed under 75,000 yet. We've seen our first bounce today, but like we saw last week, the bounce at 85,000 for a 3-day that soon petered out. The trend remains to the downside. and 70,000 is on many players' charts. If I take this up to the weekly zone, right, there's our 75 here this week. But we look further to the left, and it takes us down here under 70,000. You see this 68,000 level. So 70,000. This is back. This is the weekly chart, guys. Takes us back to 2024 levels under 70,000. So and that momentum looks like it's just building, isn't it? 1, 2, bit of a bounce this week and possibly next week, but 70,000 certainly can't be ruled out. Certainly if we breach 75,000 to the downside. So Bitcoin weak, weakening like gold's weakened. Will it bounce back? Is it the alternative many have been talking about when you're looking at gold? I don't think so, really, because it's, gold is real. Gold is held in bullions, and people like touching stuff. It's difficult to touch your wallet, your Ether wallet. But anyway, enough on that. Bitcoin, week, couple of weeks, and we've been waiting for that breakdown, and that's certainly what's happened over the weekend. The big hallelujah move through 85 on Thursday. That triggered the move through 85 and into 75 today. So that channel has been burst quite significantly. But again, it's quite a steep move down. So the buyers may be coming in at 75 now, but who knows? Maybe looking for 70 on the big screens. Let's see where we end. Stock markets closed Friday, closed the month out. I didn't actually mark it in Friday's close, but I think we were relatively positive, weren't we? Had that PPI reading that showed more hotness, and Walsh's appointment on Friday. So let's go to the stock markets. Thursday was down, Friday was down, and we've bounced a bit here. Bounced quite significantly, we've just seen. But again, you can see we're still, obviously, I've got too many. Take these fib retracements off, can't be too many. But you can see the point basically I'm saying is, we are still consolidating at highs. This is still relatively positive. We've still got lots and lots of key companies report. We've got, I think Amazon reported today, didn't they? I think they're already out. Sorry, it's a new month. Amazon today, Google or Alphabet report on Wednesday, the headlines this week. Also, we've got the central banks, as I said earlier, as we move into the new month. Tech being bought here on the NASDAQ today after 2 days down. The Dow, less vicious move lower, but a strong bounce today. We've been trading this on the 2-minute pre-market. We've done quite nicely on that one as well. So again, you can see the point I'm making here on the daily timer, consolidating at highs, close to all-time highs again. Good day today. Big green candle here. Look at these green candles. Much more significant bodies than the red candles, isn't it? So bit of uncertainty here in the Dow. Remember, only 30 constituents make up the Dow. Caterpillar, the big bellwether, they reported last week as well. So 49,275 at the moment on the industrial indexes. And the most important one of all, the S&P 500, 6,974. 2 big down days. Certainly scary on Thursday as we plummeted to 6,800. I looked it down again Friday, closing just above the 20-day moving average. We've clearly got buyers today, and we're at 6,975, as I said, all-time highs, intraday all-time highs last week on Wednesday before that 2-day sell-off. But we are now back into the upper half of the Bollinger Band, and we haven't been under it on an end of day for a week or so now. So again, consolidating at highs. Will we run out of steam once the earnings season comes to an end? But there's still plenty of key companies to report. Big tech companies all done by the end of this week. Retailers take over next week, pharmaceuticals as well. So pushing higher here, pushing into a potential overbought area on the S&P. But 7,000, we haven't closed above it on an end of day basis yet. So that's what the bulls will be looking for, a key psychological close over 7,000. We trade at 6,975, 25 points shy of that key number today. Harry, I'm going to wrap this up. I'm sorry, Matthew, Harry, Matthew. Why do I keep doing that? Must be old age, I think. Let's go back to your gold, see if it's triggered. Let me know. Is it triggered, my friend? 15 minutes. Probably not. 15 minutes. Let me just reset that. Yeah, we're still, 15 minutes still short. Set that up. Work down a bit. It's our 5-minute trend trades doing. We still short as it turned on us. So reset. There we are. So that's still short. It hasn't. We've got a bit of a. Sorry, let's move up. It's a tentative cross there. So that's that. Not quite clear yet. So I wouldn't have triggered on that one because that's the actual cross, and now we're down now on that one. See what the others are looking like. And we were short on the trend following. So the MACD and SAR. Still short. There's that spike down there, so we might have taken some profit off again. But the MACD and the signal line still negative. The histogram still negative. We're moving down now, so certainly stop loss will be at entry now on this one. If we didn't take some off on that big move down, so that's still moving lower. But you can see there your key level on the MACD and SAR system, that's still short. You wait for either a touch of the lines or a flip of the parabolic. That's what gets you out. So, but that's still short on that setup. The moving average, the EMA, the EMA trend following moving average, that's still short. Reversed. Touched the middle line and came back down, so we're still short. Stop loss would now be here on that one. I would have pulled, actually no, it's there now, isn't it? Stop loss there, then went lower, then went higher. So if I'd pulled this down too aggressively, we would have been taken out 5 minutes ago on this one. But stop loss either at the midline of the Bollinger Band, the mid moving average that you're trading, or you can count the candles back. So as we were moving down here, we'd got in here, we'd added to it lots of volatility, but be careful about getting too close. Would have been there as we've moved down now, counting back on this one. So that volatility might have taken us out if we'd got our stop loss too close. Indeed, it might have done, but that would have been enough for a re-entry. This one here, 14. Remember, this is a trend following. Call me Harry. Matthew, I'm so sorry, my friend. I know a few Harrys, but I know a few Matthews as well for that matter. Why? I think it's because it's AHAH. Haha. SRV. For some reason, I've read that as Harry. It's your handle, my friend. So I'm very sorry about that. I know people get quite twitchy about their names. I get called all sorts of Peter, Ian used to be, or Ian and Peter, two separate names. People could never remember Stuart. I'm such a forgettable character, obviously. But, anyway, down we go again. So 94657. So we've reached 9660 again on the gold market. So the trend followers are still in the money. Even the mean reverters are also in the money. I don't like. Oh dear. Get rid of that. So we want to do open a layout is what we're doing. So back to our Bollinger Band stochastics. I bet we haven't had a cross. No, they've touched. See what's happened is touched, but we've gone lower. So you wouldn't have, because that's happened there on that candle there, but you wouldn't have waited, and then the following candle's been down. So we're still short on this. So are we going to have a big fat bodied candle below that wick from 15 minutes ago? So I'm still short. There we are. It's moving low. It's not over yet, but let me leave you I'll leave you at 50 in 3 minutes. See if we're still in the money on that one. Can I call you Harry Matthews or Matthew Harrod? No, I won't. No, it doesn't make sense. Yeah, it doesn't make sense. Anyway, I'm off to trade the DAX and the Dow now on a short-term basis. So let's. I'll leave that. We'll come back. So I was going to. Yeah, that's still short. So let me look at my Dow setup. So what's this one doing? This is looking to go short, but we've had across the trend is still running. That's long. That's there's a pre-market there. That's what I was doing before. Pre-market low here was this morning, just ahead of the European Open, and we've been long ever since. There's the opening, cash open at 2:30 my time, 14:30. Big positive candle. Lots of weak candles before that. So add to that. Even though this is a mean revert, the trend is much stronger. So again, if we go to a simple trend following strategy here, the EMA cross on the 5-minute, that's kept you long. There's the volatility of the open. Where did we finish? Positively, and again there, chances to enter there and just trail that up. Don't get your stop loss too close. Stop loss now where may have topped out there. My stop loss would be here now, from an initial entry back here earlier. So that's in the money to the upside. And again, if you want to look at the 2-minute time frame, because it's the one I actually use on my trading platform, long out support, long again as we've made a new high here. I'll come back. Every 20s supported, so long there. Added again as we've made a new high of the day, and not got the stop loss too close as it's reversed inevitably. Then again, so lock some profits in, like taking some out there on that 3-bar reversal we've seen here. Small, but there we are. Are we at a key level? Where are we? 492.50. Yeah. So Dow. That's long. That's nice. Easy trade of the new week there on the Dow. So anyway, take care, everyone. Be safe. I'll see you tomorrow for what's tomorrow? What did we say was tomorrow was? I've forgotten already. Brain like a sieve. Silly old man. Tomorrow we see. So obviously overnight we got the RBA, and that's Tuesday. RBA. Lots of plenty of central bank speak, and it's the JOLTS tomorrow. So job openings, churn, people changing jobs is what the JOLTS measures. 7.2 million last time, 7.15 last time. Sorry, 7.2 million expected tomorrow. Openings ticking up a wee bit, but they've come down quite significantly. Is the trend. The tip numbers will be interesting as well tomorrow. It's only yellow here, but. JOLTS tomorrow. RBA ahead of that, expected to raise rates. Interesting. See what that ticks markets tomorrow. Okay, guys, take care. Thank you, Matthew, for being here all this time and listen to my dribblings on. And I will say I'll see you all tomorrow. And good luck with your trading, Matthew. Any more comments? I appreciate them. Stick them on our Discord group. This is the general chat here, general chat. It's the big community that's asking for help or about anything, and trade chat about actual positions you might have put in or not. And do obviously post everything, your winners and your losers, not just the winners and not after the event, but this is my setup, this is where I'm going to get in, or this is where I got in 2 minutes ago because of X, Y, and Z. This is my target, this is my stop loss. Be honest with yourself, guys, because markets very equalizes very, very aggressively. So anyway, be good, everyone. I'll see you tomorrow for the JOLTS numbers, same time tomorrow, Tuesday. So have a good Monday evening, Monday afternoon, or Monday morning, wherever you are in the world. And trade carefully, my friends. All the best.